I like to say it's a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do over the longer term.
In the vast world of real estate, when a billionaire like Barry Sternlicht speaks, it's time to stop and listen. Recently, Sternlicht dropped a bombshell warning, comparing upcoming challenges in the industry to a brewing hurricane. Stay tuned, because by the end of this video, you might be looking at the property market with a whole new perspective. According to Barry Sternlicht, the aggressive monetary tightening by the Fed is the reason for the economy's problems. The billionaire CEO of Starwood foresaw a real estate market Category 5 hurricane and impending recession. His viewpoint has not been as optimistic in the recent weeks. According to real estate mogul Barry Sternlicht, a storm is brewing for the real estate industry, and a recession is imminent despite rising promises of a gentle landing. In an interview with Bloomberg Wealth, the CEO of Starwood Capital criticized the Federal Reserve's rapid monetary tightening. He cautioned that the effects of central bankers' aggressive pace of tightening and interest rates rising by 525 basis points to beat inflation will affect the economy. Moreover, the real estate industry faces difficulties due to rising rates and tighter financing conditions. Around $1.5 trillion of commercial real estate debt is due to mature over the next 3 years. If rates stay high and property values decline, this might result in a wave of defaults. Barry Sternlicht said, "I like to remark that there is currently a hurricane over real estate." Additionally, he stated in an interview with David Rubenstein, "We're in a Category 5 hurricane, and it's kind of a blackout looming over the entire business until we receive some reprieve or some knowledge of what the Fed's going to do over the longer term." Sternlicht believes that a recession is imminent despite renewed optimism that the Fed can prevent one. Additionally, Sternlicht said there will be a significant contraction of credit. He added, "Any asset class in the nation has not yet experienced an adjustment to that cost of capital. It will happen, and the economy will weaken." Weakened economic optimism already makes this apparent. In the second quarter, the CEO Confidence Index moved down 1 point to 42. According to data from the Conference Board, the Consumer Confidence Index increased to 110 in July, but is still below pre-pandemic levels of about 130. Sternlicht added, "The fact that unemployment is still low is largely a result of Biden's $1 trillion infrastructure plan and the fact that the services sector of the economy is still strong." Starwood Capital Group is a private investment company with a focus on real estate, hotels, and energy. Barry Sternlicht is the company's founder, CEO, and chairman. Additionally, he serves as the chairman and chief executive officer of Starwood Property Trust, a publicly traded mortgage REIT run by Starwood Capital Group and listed on the New York Stock Exchange. Sternlicht also serves as chairman of SH Group, which he formed to create cutting-edge luxury and lifestyle brands for hotels and housing projects. These brands include Baccarat, Treehouse, and One Hotels and Homes. We are all one person who is part of one planet, according to the philosophy underlying One Hotels. The main sources of Barry Sternlicht's fortune are his real estate holdings, his position as CEO of Starwood Capital Group, and Starwood Property Trust, Inc. He has been able to build and manage successful projects in a variety of areas within the real estate industry with the help of profitable investment prospects, excellent business acumen, and strategic approach. His estimated net worth was $4.3 billion, thanks to real estate investments in apartment buildings and hotel chains. So, what was Sternlicht's approach to real estate? It is not what you think. Let's have a look. Starwood Property Trust is using a conservative strategy to manage the bumpy market, according to its billionaire chairman and CEO Barry Sternlicht. During the Real Estate Investment Trust's second quarter earnings call, Sternlicht stated, "I'm not as sanguine as all the pundits you hear about in the morning press that we're going to avoid a recession. Spreads have widened in addition to rates rising. On the opposite side, you will witness simultaneous declines in spreads and interest rates." The timing and interest rate increases by the Federal Reserve have drawn criticism from Sternlicht. He also spoke out against the federal government spending, mentioning the CHIPS and Science Act, the Inflation Reduction Act, and the Infrastructure Investment and Jobs Act. Sternlicht characterized the economy as an icy lake. He claimed that it is sturdy but that there are cracks. Real estate, technology, and private equity loans are maturing as those fissures. According to Sternlicht, the Fed's policies are harming real estate, and issues are predicted for all asset classes. Even the good ones, he continued, because people's capital stacks are a little off right now. The REIT reported that the second quarter's earnings of $168.8 million, or 54 cents per share, for Greenwich and Miami Beach-based Starwood fell by 20% from last year. $515.7 million in revenue, up 58%. The company increased its liquidity by issuing $381 million in convertible notes in July and by receiving $1.3 billion in commercial and infrastructure loan repayments in the second quarter, according to Rena Paneri, Chief Financial Officer at Starwood. Additionally, the $42 million loan supporting a two-story retail facility in downtown Chicago was foreclosed upon by Starwood in May. According to Paneri, the property was valued at the same amount and would be leased before being sold. According to Paneri, Starwood seeks to get all its money back for the remaining REO, real estate-owned properties. The Broadway Trade Center in downtown Los Angeles, which Joel Schreiber lost after filing for bankruptcy and a failed sale, was bought by the company last year through foreclosure. So how was the GDP for 2023? Is there any improvement we can expect from the previous year? Or is the situation much worse? The moderate 1.4% GDP growth predicted for 2023 represents a slowdown from the early projections. As the epidemic spread, the industry originally saw a dramatic decrease, but subsequent recovery efforts and recalibration have enabled importers to return to normal inventory levels, addressing the enormous glut seen in Q2 of 2022. The logistics industry has also recovered, returning to pre-pandemic capacity and pricing. Although these changes offer short-term respite, they can conceal underlying weaknesses since manufacturing closures and port problems could recur in another global catastrophe. Global supply chains are forced to investigate solutions to handle the China problem and ensure against future interruptions by the continuing uncertainty surrounding tariffs, trade wars, and geopolitical concerns. Additionally, the affordability of low labor prices in Southeast Asia continues to be a major concern for many, although diversifying production across several places has emerged as a workable alternative. Therefore, the sector must do a difficult balancing act to minimize hazards while maximizing production effectiveness. Compared to last year, the first half of this year appears to have had relatively few shocks and interruptions. Nevertheless, as peak selling season approaches, we anticipate that Q3 and Q4 could give a different flavor of events. The delicate balance between shifting consumer demand and the market's capacity to supply it continues to be a source of worry. Although the market is showing signals of stability, the true test of its health is how resilient it is when demand fluctuates sharply. The chairman of Starwood Capital Group stated in an interview that the work-from-home phenomenon is a U.S. phenomenon. Furthermore, Sternlicht doesn't appear to believe it will endure. He said nice buildings are still leasing, and a nice little recession will clear this. Is he correct? Will workers be under pressure to return to work if there is a recession and subsequent increase in unemployment? Or will people continue to work remotely? We should wait and see. Indeed, when someone as influential as Barry Sternlicht uses the word hurricane in the context of the real estate industry, it's not something we can simply brush aside. The winds of change are blowing, and these developments might reshape the real estate landscape as we know it. So before you go, please give this video a thumbs up if you found it informative. We'd love to hear your thoughts on Sternlicht's warning, so please share them in the comments below. And if you haven't already, hit that subscribe button to stay updated on the latest industry insights. Until next time, stay curious and stay informed.